Welcome to BitBoy Crypto, home of the Bit Squad, the largest and greatest crypto community in all the interwebs. Now, this is an interesting story here. Crypto markets soar after Fed commits to printing and Evergrande plans to pay its debts. Now, I discussed this a little bit last night on our crypto wrap-up video, so I've already touched on this a little bit. Evergrande bailed out by the Chinese government, okay? They're going to be taking it over. They didn't pump the money directly into Evergrande. They pumped it into the banking system to keep them from defaulting on their debts. So now China can come in and take over Evergrande and not be in an upside down situation, basically. So that is what's going to happen. As long as they don't give Evergrande the money, then they're still able to come in and take that company, which they will. Now, they may not come out and say that they are, but they are. That's going to happen for sure. But the more interesting thing here that I want to talk about is the Fed, okay? So let's see, come down here. So the midday spike in the price of Bitcoin yesterday when it spiked up to 44,000 came following comments from United States Federal Reserve Chairman Jerome Powell, who explained that the central bank plans to continue its current level of monthly bond purchases for the foreseeable future. Interesting. Those bonds just keep coming up, keep coming up. Powell also signaled that a hike in interest rates could come as soon as 2022. Now, that seems to be very bullish for money printing at first. Okay. It seems to be very bullish for money printing. Quantitative easing, right? That's the only thing that can keep them at this point from cutting interest rates. But notice he says it could come as soon as 2022. Now, originally, this was set to take place in 2023 when the economy is healthier. But now there's hallmarks of a healthy economy, okay, which is all a joke right now. But regardless of that, you have inflation. It increased from August to September, but the rate at which it was increasing fell off a cliff. Very dramatic difference from July to August. What that means is the trend has started reversing, okay? So that was one thing, and then they were looking at, I think, jobs report, maybe good, came out good. I don't know if it's actually out yet. Can't remember what the second thing was. There was another reason that they were looking at this, being a positive thing. But the thing is, we don't have a healthy economy right now. Very, very clearly. I mean, if you try to do business anywhere right now, it's very hard to do business. Still having massive supply chain issue problems, having massive employment problems. People don't want to work right now. A lot of people don't want to work. I know that. I'm building a house right now. It's hard to get people to actually do stuff at the house. Which wasn't a problem before. The pouring of my foundation was delayed by months, just the foundation, because they couldn't find people to pour the foundations. Okay. So the point here is this, is that it's supposed to be 2023, but now they're saying 2022. So even though that's next year, that's still pretty bearish for the economy, especially when you understand the economy is not doing well. They're trying to force it to make it look like it's doing great. But here's the more important thing here, okay? What do we talk about over and over and over again when it comes to the financial cartel and crypto, okay? We talk about FUD. What do? They put out stories that intentionally confuse people. What do you think the whole thing with Bitcoin and the environment and Elon Musk was? What do you think that was? You think that was random? Oh no, that was not random. That was made for Bitcoin to look a certain way, to confuse people, to get people to sell their Bitcoin, okay? That's what that entire thing was. So do we think the federal government is any different? Do we think that the federal government is going to actually tell us what's coming, going to actually tell us what's happening? They've been signaling a lot towards inflation, saying, be careful of inflation. When the government starts telling you inflation's a problem, you're about to get the rug pulled out from under you, okay? What we're seeing here, when you're looking at the discussion involving the debt ceiling, which I'm going to try to get a little more researched on, so I can talk a little more tangibly about that. But between the debt ceiling, government shutdown, inflation, deflation, bond yields going down, tapering starting in November, interest rates hiking in 2022, what does all that equal? What does all that equal?
A bear market.
Well, it's hard to know. It's hard. Well, for the economy as a whole, and none of it looks good. But the thing is, it's a lot of mixed messages. It's a lot of mixed messages coming in at one time, okay? When they're warning you about inflation, but then they're lowering the bond yields, You can't make heads or tails of what they're trying to do. This is all about confusion on the American people. That's what's going on right now. So you can't trust what's coming out of the Fed. You can't trust what's coming out of Gary Gensler's mouth. Certainly can't trust what's coming out of Janet Fallon Yellen's mouth. Can't trust what's coming out of the banking broad's mouth, Elizabeth Warren. Can't trust anything that comes out of these people's mouths. Remember this. Watch what they do, not what they say. Watch what they do. Don't listen to what they say. So I think over the next few months is going to be pretty clear, what is going on there. So